Hey guys, what's going on? Welcome to another video. This video, we're going to be doing a weekly analysis on the dollar index to see exactly what we can look for in price as we begin the new week. Okay, so today is Saturday, the 6th of July, 2024. And what we will be doing is we will be looking at price projections for the next week, which will be 8th of July onwards. Okay, so we'll take a look at the dollar index only, right? You can project everything else based on the direction that the dollar index is taking. All right. Now over here, we can see where are we in terms of structure. Let's talk about structure first, right? Let's talk about structure first. So structure, we can see that price is breaking higher, right? Obviously, you can see that price is breaking higher here, here, and that's pretty much it. And you can also see that price has taken the chance to engineer buy side liquidity. Okay, we have taken the chance to engineer buy side liquidity. So from a structural perspective, okay, from a structural perspective, we are looking for price to come where? Now, if you take this range here, we would like for price to come into this range. We would like for price to come into this very specific range right here. Okay, so could we do that? Maybe we'll see that next week. But let's take this sequentially. Let's look at it one by one. Okay, let's take a look at this one by one. So keeping this aside, think about liquidity. Okay, think about liquidity. So we can see that as we are going up, this is the only liquidity pool that was created. But what did price take out? Price took out this. Okay, now this is an inducement high. Why? Why is this an inducement high? Well, this is order pairing. Okay, I'm going to give you a summary. Order pairing is when we introduce liquidity into a range. And when it gets taken out, that is your true order pairing. So for more information on order pairing, you can definitely take a look at the masterclass that I'm having, right? If you are interested in the masterclass, just send a message to my Instagram. You know my Instagram. Just send a message to my Instagram or to my company Instagram saying that you are interested in the masterclass, and I will definitely hook you up. Okay. So apart from that, looking at this inducement high, we can see that price took it out and then we reacted to go down as it should. Okay. Now you have to understand that when we break structure and when we relatively make new highs and lows. Now, what do I mean by relatively make new highs and lows? You have the curve, right? So on and so forth. So when you start breaking the left side, you are relatively creating a new high. When you start breaking the left side, you're relatively creating a new low, like so. Okay, like so. So when you are relatively making a new swing point, that confirms liquidity. So what does that mean for all of this? Now you can see here, this entire thing right here. Can you see how we have sort of a double top formation, right? This being your buy side liquidity pool right here. See that? Then we take it out and we sell off. Okay. Why are we not going all the way down here? Well, of course, fundamentals. But technically, why are we not going down here? Because we have this inducement high. Yeah. Large funds, smart money, of course, they are looking at the same charts that we are looking at. And if a concept works, it means it is a truth of the market. It is a truth. It is a truth of price delivery. So this inducement high, that's a target, right? So this is like a side story that occurs while we're moving up. Okay. Now think about that. Think about that for a second. We can see that we form double bottom here. See that? And we confirm that double bottom by taking out this high, this one right here. Okay. Telling us that once we take out significant liquidity, we are going to come for this double bottom itself. And then we're going to trade higher. Why not this double bottom? Yeah. Why not this one? Well, that was a possibility as well. But note that this is the daily chart. So whenever an injection of volatility comes via a fundamental news driver, it can change everything. Maybe there's an SMT over here with the bonds. Maybe there's an SMT over here with Euro USD. You don't know unless you find it. Okay. So for the weekly analysis, let's take a look now. Let's seriously take a look at that without jumping into a lecture. I almost jumped into a lecture over there. Okay. So what can we see? We understand this. We understand that the sentiment is bearish Dixie. Why? NFP worse than expected. We are revised data. So you see NFP, we actually had revised data. Even though it was a bit better than expected, the revision of the data made it worse than expected, therefore making the dollar index bearish. Okay. Right. Now, having taken out this inducement high, what can we say about the price action here? Well, we can say that relative to what we're seeing over here, where my cursor is, right? See that? A reaction over there. We can say that this is sell side. Here. This is sell side. Okay, that is sell side. Now, as per a target, right? As per a target, what is a potential target that we could be looking at this? Why? Because this has no order pairing associated with it on the daily chart. Okay. And this is our preliminary target, and that preliminary target would be this sell side liquidity pool. Okay. This is going to be our preliminary target. How are we going to come here? Biggest question. How are we going to come here? Right? How are we going to come here? Well, now we can see this is the daily chart. So on the daily chart, if you take a look at one time frame higher, and before we go to the 4 hour, we can see that this right here is an inversion fair value gap. Okay, that's an inversion fair value gap. Now, if you drop down to the 4 hour, on the 4 hour, you can see price use that inversion fair value gap, but there's a difference. Meaning, we saw it on the daily, right? So even the daily sometimes has to match up with what's given, what's being printed, because we are learning everything factually. So the daily must give us a wick up over here, right? But in order to do that, we need to be paired with some form of liquidity, right? At least, some form of liquidity must be there for us to be paired with this, for us to be able to generate a move up here, right? There must be some form of liquidity. That is this. Look. So we have this double bottom liquidity right there. But price, okay, went up there and started dropping. Okay. But this right here, this signature in price, high, high drop. That will be called my CSD candle established in 2021. As I produce more videos, you will see that I am the creator of everything you see online. All right. So this candle, especially when it's something like this, when it's like an engulfing bearish candle, you are interested in this point only here. The point where the next candle ends there. So if we are going to be looking for price to make some form of a retracement, here's where I'll be doing it from. Do I want that to happen? No, I would just prefer if price goes directly down here. But if it does this also, I have no issue whatsoever. Okay, zero issue whatsoever. So looking at this now on the daily, this is what we have. Sell side, and little side story over here. Okay, that's a little bit of a side story. Okay, now this buy side liquidity pool on top over here, that we can argue and we can say, okay, we should have technically smash this high because we're equal high, right? Okay, that is true. But where's the liquidity that's taken? I mean, there's no liquidity taken that will suggest a run back to this high, right? There's no liquidity taken as such. What we do have is we do have a CSD candle, which is a true reference point by the algorithm to cause delivery. But there is no liquidity taken to say, oh, look, I have enough fuel, I can go up here. All that is down here. Okay. And fundamentally speaking, for now, we have bearish dollar. Let's go ahead and take a look at the economic calendar for next week. Let's take a look right here. Only the high impact. What can we see? Well, we can see that Fed Powell testifies you do not want to be touching price until it's over. 10 o'clock. He testifies again. Crude oil inventories, 10-year note auction. So you're waiting for all of these events to finish. Now this 10:30 and 10 o'clock, you'll be waiting for 10:30 to see what the data is there. Okay. Then only you can make a move. Because I don't know what other courses are feeding you. I don't know what nonsense social media and YouTube is feeding you. But no one knows the direction that price can take once the news has released. Because some people are positioning themselves even before a news driver. And they only post the fellows that went well. You can never anticipate a whipsaw in price action. Okay? You can never anticipate that. That's why you wait for the news candle to print and then you make a decision based on certain criteria. All right. On Thursday, we have GDP, that's GDP, that's for the pound, euro, CPI, 8:30, CPI, 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 initial jobless claims, and the 30-year bond auction. On this day, you're waiting for the CPI candle to print, and then you can make a decision. Because what if, now here's why, okay? What if you get a CPI reading, right, that says better than expected, and then the dollar starts to go up, right? Initial reaction. And then suddenly it automatically updates and says, uh-oh, the better than expected has been revised to worse than expected. And then the dollar starts crashing to the floor. Can you have anticipated that? No. If you are long the dollar, perfect. I mean, I'm happy for you. But if you hold it too long, you're going to get taught a lesson. Okay? So don't try to be a hero because at the end of the day, you can show off and whatnot to gain clients. But you do not want to be teaching your students. You do not want to be teaching your followers bad habits. Okay? Even hedge funds and even market wizards, if you have read that book, even they wait for the news drivers to release and then make a decision based on the numbers. If you have a swing position open, that's a different story. But on that day and on that time, in that hour, in that session, it is an extremely dangerous thing to do for your capital, not for you. Okay? Right. So coming back here, that's the story for next week. Looking for some sell-side liquidity, especially this. Okay? And this as well, if we can get there with more bearish news for the dollar. Otherwise, we will straight up come here. After this, we will straight up come over here. And we will see how this pans out or how this has panned out on Friday. Once the week is over, we will see exactly how this panned out. Okay. So I hope you found this insightful. I hope this will help you in your trading for the next week. Right. And that's basically it. Okay. And if you want further information on how price is likely to print, okay, if you want further information how price is likely to print, simply take the monthly open there and apply the CRP continuation, CRP reversal, which is something I must continue the series on But I will not continue it until you guys share it around, give it more views because it deserves a hell of a lot more views than what it has already. Because let's not forget, every day I check Twitter. Literally every day I check Twitter. It has someone, a specific group of people, right? Very specific group of people post the exact same things I post on my public Telegram chat. I'll let you think about that. And that's it. I'll see you in the next one. Good luck and good trading. Bye bye.